Do you want to make more money with the least amount of work possible? Or maybe just an additional income stream to help pay the bills? Well, you might want to consider long-term investing in the stock market. If you're not already doing so, you need to start now. Before we start, like, subscribe, and leave a comment down below if you enjoy my content or you'd like to follow along, because I'll be posting more of this kind of stuff in the future. So why do you need to invest now? Well, according to a meme that I saw, Albert Einstein says that compound growth is the eighth wonder of the world. Now, what's compound growth? It's where, in terms of investments, your money makes more money, and the money you just made helps you make even more money, and it's basically a never-ending cycle. However, compound growth needs time to grow. It's kind of like a disease. It starts off with one person, then spreads to 2, then to 4, and eventually it might get to 1 million. It takes a bit of time before, it starts small, but eventually it gets to the big numbers. And that's sort of with investments. You need to start as early as possible, and eventually the end game is sort of where the $1 million comes from. Now, in terms of what you invest in with the least amount of work possible, I would recommend stocks in the long term, just because you don't really have to do anything. You can kind of sit back and let the people at the company of these stocks run the business for you. And the great thing is that you don't have to go in, you don't have to manage the day-to-day business, you don't have to hire people, you don't have to look after people. You have the professional CEOs and CFOs sort of running the show. Also, stocks tend to represent companies of the most popular products and services out there, so you know what you're kind of getting yourself into. If you're getting into Apple, you own a company that sells, one of the best products in the world, or Amazon, one of the best platforms for e-commerce. It's simply owning one of the best companies in the world, and that's what stocks are, a piece of the business. And there are some companies that provide you what's called a dividend, and that's kind of a share of the profits. And based on your ownership, you get a split of the profits. Now, you're probably kind of scared with stocks, or you've heard from other people or friends that, hey, it's the end of the times, the stock market's gonna crash, it's turning over. It's absolute bullshit because, the stock market has gone up and down for sure, but over time, I'm talking more than 10 years, more than 20 years, it's always tracking up. And through all the horrible times like World War I and II, the Cold War, and sort of all these crazy political or worldly events, and guess what? The stock market is still up from where it is, like hundreds of times. So if you held on, you would always make money. Now, the thing is, people are so scared, like, oh, what happened in 2008? Sure, you could potentially lose half your money. But the thing is, that's more so out of fear and sort of like panic selling. The company itself that you are buying doesn't really get affected that much. End of the day, do you think a recession is going to stop you from watching YouTube? I don't think so. So maybe Google might be a very defensible company in the long term, even during a crash scenario. And simply, there's just so much that hasn't been reflected yet in the stock market. And there's just so much opportunity, especially on technology and automation. And even companies that aren't in technology and automation, they can use technology and automation within their own businesses to make their businesses even better. For instance, like, how do you know McDonald's won't create, a machine that automatically cooks all their burgers instead of having, human workers? And that could, save them so much cost. That is not reflected in the stock. So that's an example of something that presents itself as an opportunity, and it hasn't really been seen through by investors or speculators, just because everyone is sort of so near term. And what I've noticed as sort of a investment professional is that the time sort of perspective is 1 or 2 years. If you can't hit your numbers within 2 years, or if that's not something that's reflected in the next 2 years, then we don't treat those numbers seriously. But it's going to happen. So, you just kind of be patient as someone who sees the long term in companies. And also, just speaking about, global growth. Everyone's sort of hating on China and all the non-US markets right now. We're talking about the trade wars, but at the same time, like China and India, like the GDP or sort of like the wealth that a person represents has just gone up so much in the past like 10 years or 20 years. The average person in the US makes $50,000 per year. 20 years ago, the average person in China made $1,000. And now they're worth almost $10,000. That's a tenfold. But that's still a long shot from what the average person in the US makes. So they're just seeing so much upside and so much fast growth going on in the world. I don't even think a recession can stop that kind of growth. And even if we kind of have a recession and it cuts back in half, that's still a significant pace of growth and technological advancement that we've never seen in a long time. And there's just so much runway left comparing, say, your average person in China versus your average person in the US.